Hey everyone, welcome back to the Mark Loeffler Experience. We got Mikey Iuliano coming on with us again today. I know I said his name wrong, but who really cares? We're going to be talking about stocks. This is what we're going to be doing. We're going to talk about S&P and the bull trend. We're going to be talking about the dollar, where that's going, how the stimulus has affected it. We're going to be talking about one of the stocks I'm invested in right now, Palantir, where we think it's going, some of the trends on it, support, resistance. Enjoy today's video. If you guys like it, if you're invested, comment down below, let us know. Thanks guys, see you in the next one. So Mike, welcome back to the channel, my friend. Let's start with the S&P, our predictions for the future, really.
I think anyone who's watching this, we've been basically thinking about and been aware of the fact that we got stimulus recently. That's a big catalyst. And anytime me and Mark are talking about anything, we're saying, well, what's the catalyst? What's the thesis? What's the reasoning? So right now, everyone's focused on the stimulus, and we just had the recent $1.9 trillion stimulus, and Joe Biden put that in and signed that into being official recently. So, ever since that's happened, this is the fear and greed index, Mark, and we've probably looked at this before together.
Yep.
Last week, the fear and greed index was over here in the 40s last week. I remember me and you and other people talking about it, saying, well, we just had a big stock market drop, and so people are fearful. But as soon as the market starts going back up, remember we said this was going to tip towards the green? And look what it did, because the stock market is now going up. And not to be mean, but people are kind of like lemmings when you talk about the stock market, right? If everyone and their neighbors are making money, you're happy. And if everyone losing money, you're scared. And so I think that's basically what we've been watching. And when I go to the chart, Mark, this is the chart we've been watching since the election. Okay, so we've done videos together since the election over here. And once it jumped up after the election, it just stayed in this channel. Now, there's a couple of moments where it went a little bit below the channel, but it immediately went back up in there. And what's the other thing it's doing here, Mark? Look at this. We've got higher highs forming, right? It keeps going higher highs, higher highs. I don't think the bull trend has been broken yet for the S&P. And I think that right now, as you could see here, I've been following it the whole way. As soon as we did this here, I said to myself, we're probably going to head towards the top of the channel. And I labeled this breakout thinking that we would go to the top of the channel. We're almost there.
You can see, I mean, if you draw the line from the high over, right, that was the new breakout.
Yeah, basically we were watching that right there.
Yeah. And obviously the top of that channel is 4150-ish.
In that range, yeah, in that area. I think you said to me earlier that if we get around 4,100, you might just start taking profits on some of your S&P related stocks or other stocks, because it's a staircase on the way up. Can it break up above the top of this channel, Mark? I guess it could, but why gamble, I guess, if you're already up a bunch of money?
Well, and I said this in my private group a lot. If it does break out, and it can break out like 100%, that can happen. It's going to give me an opportunity to get back in. So I'm going to miss out on something maybe, yet the chance that it's going to break out, because it's been in this channel for a long time, it needs some impetus, right? So what would be the impetus to do that? And number two is I'd rather be on the sideline more and then get back in if there's that impetus, because once it breaks that channel, it can run. So I'm going to miss out on a small bit, but I'm not going to miss out on all of it.
Well, and that's the big struggle with investing. First of all, if you don't do what Mark is saying, if you don't take your profits when you feel like, this is, too good to be true, or I'm happy with what I've made. If you don't do that, you will be part of every drop that ever happens. If you're not going to take your profits along the way, you will be part of the roller coaster ride. And what Mark's saying is basically we won't time the top of that roller coaster, but I don't want to be involved when it comes down every time either. You're trying to preserve your capital.
100%. It's all preservation of capital. And again, right, like I'm not aiming to hit 300% in the year. I mean, I'm good with a 30-40% return in my year. So if I hit 10% in a month, sometimes I can just go ahead and take the month off.
True. It is true. Even during the pre-election time, there was times when I wasn't even watching the market for a whole week because I just wasn't interested until the election was over. I didn't feel like I was missing out on that much. I think at the end of the day, preservation of capital is important. And you know what? You're saying 20, 30, 40%. If you have a hot year and you're compounding those 10, 20, 30% returns, it's going to add up to being a big number anyways. You might be able to actually make good money in a hot year anyways, beyond what you expected.
Well, I mean, in a year where the S&P did 10%, I did 70, right?
Yeah.
Like last year was, I don't know, what did the S&P do last year? 20?
Oh, I don't even remember,
I don't
but
remember either. So,
yeah,
but I
yeah,
mean, I beat it every year. So it's just a matter of, for me personally, I just want to make my return, my cash on cash. And, I take a lot more money out of the market now. And right now, just for the simple fact that, it's been good the last 6 months. I
yeah,
mean, obviously ups and downs, but I've timed that pretty well. So I know we were talking. So S&P, we're getting to the top of the bull channel again. So when I get to the top of the bull channel, I typically am more cash, probably 90% cash, sometimes 100%. And sometimes I put some hedges on as well, some
mhm,
UVXYs or some volatility plays. And so the other thing is we were talking about is the dollar, right?
yeah.
The dollar average. And the dollar average is basically how much the dollar is valued. And when it goes down, assets go up.
Well, basically, if the purchasing power of your currency goes down in value, you're going to have to give up more pieces of that currency to buy something,
Yeah.
whether it's a hamburger at McDonald's or a home in the real estate market. At the end of the day, it's going to require more of those worthless dollars to go buy it. We use the DXY index. I'm going to show you something real quick. I don't remember if we did this on our other video, but this is the $100 trillion bill, and this is hyperinflation. So this is from Zimbabwe. $100 trillion. That's not what's going to happen to the Canadian dollar, but it's just there is money devaluation, and the value of dollars over time tends to go down because we rely on lower and lower interest rates and printing of money. Right, we're devaluing money. So I'll share my screen. Mark's talking about the DXY dollar index, and this is a way to just gauge how far under or above par the US dollar is compared to where it was a year ago or 2 years ago. And right now I've labeled here the recent stimulus that we've had. And the reason why I've done that is because printing of money, especially during times of fear like this, where it's done in an emergency, typically devalues the dollar. So what's happened since the money was printing? The dollar value actually has gone up so far. And at the same time that the dollar was going up, Mark, the market was falling as well. So
Yep.
when the market falls, people are trading their dollars, right? They're trading their stocks for dollars. Right now, people have been giving up their dollars for stocks, and now the dollar is dropping because people are giving up. They don't want the dollars now. They want stocks and
They want
Bitcoin.
assets.
They want assets, real estate. Well, let's look what happened last year, because we had 1.9 trillion dollars recently, but we had 1.9 trillion dollars or 2 trillion printed in April last year. So when they printed the money, did the dollar immediately tank? No, it kind of went sideways for a little bit, and then we had the big drop off, right? So I think that's still going to happen. I don't see how the dollar can keep gaining value after all of that stimulus, and we're still not past COVID. COVID is
Well,
still.
well, yeah. I mean, and they pumped so much money into the economy. I mean, if you, I don't, I mean, I'll look for the graph and see if I can pop it up here. But the money supply since April of last year has, yeah, that's a hockey stick,
Yeah,
and the first time in history that's happened, right? So the money supply, the amount of dollar bills out there chasing these goods is ridiculous. I mean, and obviously, yeah, there's the supply crunch too, right? So
well, the other thing I want to point out too is that, okay, they printed the money and the dollar came down. Okay, the stimulus ran out September 1st, basically, and then the dollar went up, right? And then after the election, when the markets had gone down so much, people started trading their dollars for stocks again, and then stocks went up while the dollar went down lower. I just feel like every time the market has just crashed, people are holding dollars and then they're trading them for stocks. The market just went down a lot and people are trading their dollars for stocks. I really expect the trend of this dollar to go down and the trend of the market to go up right now
Hmm.
because
Well,
people are
and since the election, we have been in that bull trend, right?
definitely on the S&P I just showed you, and the other markets would follow suit. And like I said, we're still not past COVID. I know America has opened up more than us, but we are not fully past it. So we have fresh money printing and some hurdles ahead of us. I just, I don't think that we're going to miss out on more dollar devaluation right now. I don't see a way around that right
Yeah,
now.
I don't see it either. So with all that in place, I mean, if you just watch those kind of two things, you can kind of see when you should be maybe in and out of that market, right? And that's kind of why we're looking at these more macro indicators to be able to say, okay, maybe I sit on the sideline and maybe I miss out on a couple good days or whatever. Yet I'd rather sit on the sidelines and preserve my capital to fight another day rather than go out and maybe lose 10, 20% of my soldiers.
Well, you know what, too? I have a friend who's even more risk adverse than me, and he's very passive in nature in the way he invests. So he got in after the election, knowing January, February, he'd take profits if his stocks were to have gone up a lot. So he started taking profits in January, and he didn't really care that in February they went higher because he already won. He already
Yeah.
achieved his goal, and he wanted to preserve his capital. So other people were experiencing runs up for an extra month. He was already half cash, but he was fine with it. And like you said, another bus always comes along,
Yep.
and now here we are, right?
Yeah. It's the
So,
old, it's sitting on the bench with Forrest Gump. Wasn't that your bus? Another one will be along in a minute.
well, and you know what? When the markets start, when they released that stimulus, I started saying to you and to other people, I got into some call options and did a few things, but I kind of still kept some cash just in case, because as I just showed you in April last year when they printed the money, it took a little bit of time for things to get going. So I missed out on DraftKings and I missed out on a couple stocks that flew immediately. But you know what? I caught other ones, right?
Yeah.
Apple hasn't even run yet. So there really is always another bus, in my opinion. And there's always something else that will come up if you are patient, I think,
Yep.
right?
For
So,
sure.
yeah.
And speaking of that, I mean, one of the stocks that I'm actually long on right now is Palantir, and I've been
Mm.
basically, I don't know if I've been day trading it, but like I've been selling puts on it to kind of lower my cost average. And yesterday I did a bunch of puts and I bought them back at 30% profit. Today I did the exact same thing this morning. So I don't know. Let's maybe pull up the chart there. And
Yeah, I'll pull that up. Kathy Wood likes that one.
Kathy Wood loves Palantir. What's that? What's the one from Wall Street? Blue Anaconda or something?
Oh, Blue Horseshoe likes Palantir.
Yeah, Blue Horseshoe. Blue Horseshoe likes Palantir.
So this one here, it's a fairly recent IPO, meaning it was not listed on the stock market until October of last year. And they're involved in, I believe, cloud computing and all of that, the AWS stuff,
Yeah,
um,
security stuff. Yeah,
security stuff.
a lot of
So
government contracts, big company contracts.
didn't they get a big contract for 89 million just recently from the
Yeah, an
government?
89, 5 year, $89 million deal from the U.S. government.
Okay. And is this something that you've invested in because of the fact that they're getting contracts and because of Kathy Wood, or are there other reasons as well?
So Kathy Wood brought it to my attention. Then I started researching it, and I feel like this level that we're at right now is pretty strong support.
So if I bring up some of our other items on the chart here, the RSI didn't bottom out, but if you look historically, it's not really bottoming out ever.
Yeah,
But the slow stochastics has, and we've reached an area mark where you're pointing out there's a heck of a lot of support here, right? There's a heck of a lot of support here. Um, are you looking to either hold your position longer or add to your position if it moves above a certain area?
I've been selling calls against it as well. So I've owned it now for, I don't know, 2, 3 weeks,
Hmm.
since basically that first little drop there. I wrote it up again, sold calls, sold 30s. So I'm kind of, I think my average price on this is like technically 24.50. But with all the options, money that I've got off of it, it's probably more closer to like $16 per share.
Well,
So I mean, the goal would be to own it for free, obviously, and then you can do whatever. But I'm going to get called away at some point because I am selling calls against it.
if someone's looking at this like just from a charting perspective, it looks like we're attempting to come out of the bear trend. So right now, it seems like we're trying to pop out of it. It can always still drop a little further, so you wanna be careful and watch it. But I think that if it surges above here, that it might be a good time to buy the dips um, at that point. And let me just zoom out a little bit. You can see the last time we had a downtrend here, that when it breaks above a certain level, that's kind of when the next rally might happen. I feel like that'll happen again if we see this.
Yeah, and
Um,
then so then I'll start buying calls on it at that point.
that's an interesting chart. So I think with this one, because it's more of a speculative play, you just have to be careful that you're not caught in a head and shoulders pattern or something weird. That you just have to be mindful of that. But because you're trading it, I think that's a safer play. Is that you take that money when it's in your hands if you're selling puts on it or doing anything. I think this is something I would treat as being speculative,
Yeah,
or if you're going to hold it, don't overweight yourself in it with your portfolio, I would say.
100%. And to be honest with you, like, so I'm taking my profits at 30% in a day, which so I sold 2250 puts this morning for next for the 16th, and I
Hmm.
hit that. So I hit it. I could probably actually sell them again right now for the exact same amount if I wanted to. And then if it's more than a day, I take my profits at 50% on them.
Now, if you were selling puts on Apple, would you hold them longer?
Yeah, puts on Apple, I'd be 80%. I would, I mean, if I got 30% in a day, I would take it. And then other than that, I'd be 80%. I'd take my profit at 80%.
So basically, you feel it's less risky to hang on to Apple longer compared to a speculative play.
100%. Yeah.
Yeah. Okay. Well, and I mean, it might sound obvious, but a lot of people just, they go all out on Tesla and Space Virgin Galactic, and it's really risky. I think we're going to have a really strong few months for the market. Me and you were going into cash in February, and we ended up being rewarded for that. But as I said in March when the stimulus came, we might have a rough few weeks, but it should be followed by a great few months. That's what I
Yeah.
think.
I think we're going to run till the end of May and then sell in May, go away.
If any of your audience is into CNBC, look up Tom Lee's video recently. He's predicting a face ripper rally. He said it's going to be insane. So
It's going to be a ripper.
we will see. We will
Yeah.
see.
All right. Well, here's hoping for a ripper. And Mike, thanks again for joining us today. We always appreciate having you on, and it's been
For
too
sure.
long. So we're going to have you on again soon.
For sure. Let's keep in touch throughout this whole thing, right? It's good. It's good to have other people along for the journey with you.
All right. Thanks, buddy. We'll talk to you soon.